Welcome to a VSA Capital video blog, and delighted this morning to have Nick Bridgen, the CEO of Ferro-Alloy Resources. Morning, Nick, how are you?
Oh, not very well, thank you. Good to get the announcements out this morning.
Yeah, well, you have. It's obviously you put out two announcements on Monday morning. One obviously is your year-end results. Always good to get them out of the way, particularly as at the moment the auditors are all struggling to get them done because of wretched COVID and all that sort of stuff. But of course, actually, in many ways, the more important announcement this morning came a few minutes afterwards, which was that Vision Blue Resources, run by Sir Nick Davis, who is now your chairman as well, has put in another $7 million. So, but maybe we should just quickly have a look at your results first. I mean, the numbers, you have put revenue up, the pilot plant and everything is going pretty well. You're accelerating some of the chemistry in terms of making an electrolyte for vanadium flow batteries and also some other byproducts. Do you want to just perhaps mention a few of your highlights that you've announced today?
Yes, I mean, production was 56% up on the previous year. Obviously, that reflects a lot of the work we've done in improving the plant. And I have to say, it would have been, very much more had we not, towards the end of the year, started to be affected by COVID on our raw material deliveries. So that was a good performance, but technically, really, the figures mask a lot of improvements. You mentioned some of it, but we're also starting to make molybdenum as a byproduct. That has a big effect because the raw materials we get contain molybdenum, and we previously weren't recovering it. Now we are. That's about a quarter of our income, so it's a plus with very little cost attached. And we're working on all sorts of developments on the plant. In the year, we put in a new line to treat catalysts mainly, although various other materials. So a whole new type of production, different technology, as well as our old. And we're working on various things like electrolyte you mentioned, and ferromolybdenum, ferrovanadium, converting AMV to V2O5. We've put in the new power connection, just waiting for it to be switched on. And so there's been a huge amount of progress. And the figures don't really reflect it much yet. 50% up is nice to see, but it's not what we could have done.
I mean, it's interesting, isn't it? Because it's very unusual to have a big exploration project where you also have this, for want of a better word, pilot plant operating alongside that is able to do all of this work and basically prove the feasibility of the project in advance. Because, I mean, one of the things about your project is there are a lot of byproducts, which is one of the reasons why actually potentially the cost of your vanadium is zero, if not negative. I mean, it is very unusual and it's a great advantage. And I think that, I assume this is what's giving Sir Mick and Vision Blue the confidence to keep putting more money in so that we can actually get this whole project built.
Well, I think that's exactly right. And it's very much in line with the reason we're doing it. I mean, in some ways, it's the tail wagging the dog. I've said this before. It's only 5% of our NPV. 95% is from the project. And the project is outstanding, well beating, for reasons I've banged on about previously. So a lot of people say, why bother with this small plant? But the truth is that we're getting a huge amount of expertise. Our team really is quite outstanding, considering we're in a very small town in the middle of South Kazakhstan in the steppe. You would never expect the level of expertise that we've got in our group now to be in such a place. So we've got good technical experts, laboratories. And what we're doing on the existing plant is really quite complex stuff. And well, really, it means that we'll hit the ground running with the big project. So, and I should say, our aim is to make a significant amount of money out of it, which, even though it's only 5% of NPV, the real value of it is that it'll kick in and come during during construction of the big project. And therefore, it'll very much reduce the amount of money we have to raise and give much more security to lenders and investors, and it makes the whole project much more robust, even though in NPV headline terms it's not so significant.
I mean, on that more money coming in, as you say, it limits what you need, and basically in terms of equity, Vision Blue is going to over time provide all these sort of stage payments. But maybe just, you've got $7 million coming in now. Where will that money go? How long does that last until the next lot of money comes in? You'll just talk through that briefly.
Yes, the original deal that we announced back in March was for envisaging a sort of early stage investment of 12.6 million altogether. 10.1 million of that coming in fairly quickly. Some of it was conditional on us getting certain legal formalities done in Kazakhstan, which we've now done. And so this investment of $7 million, actually it's happened on an accelerated timetable because we envisaged it would take us 3 months to get the legal formalities done. And then Vision Blue had another 3 months before they needed to invest. So we're doing this about 3 months early, which I think is a sign of the confidence that Vision Blue have in us, the fact that we're working together as a team extremely well. And there's no reason to delay. They want us and we want to get on with the project as soon as we can. What we're going to spend it on is, this isn't new news because this has been the plan, but we're just doing it faster than we could otherwise have done it, is mainly the feasibility study. This is accessing that 95% of NPV that I've just been talking about. And we're greatly increasing the scope of that feasibility study to include phase 2 as much as we can. We may not be able to get that fully ready because it needs certain sort of legal steps along the way that we may not have in place because that comes in due course. But we want to get as much of that study done as possible. So we're looking at the whole phase 1 and phase 2, not phase 1 only, which is what we previously, before we had access to investment money, were planning on doing. And that involves drilling. Now that's really good news because we've always been telling everyone we've got 5 ore bodies. We've only got 1 in our resource estimate under the Western JORC rules. But when you count all 5, our deposit is absolutely huge, mind-bogglingly huge. We can supply the whole world with vanadium for probably a decade, but certainly a long time. And drilling it will prove that and get that on the balance, so to speak. So it'll take a little bit longer than we thought, but the end result will be much, much better. It means that the headline NPV of the feasibility study will be that phase 1 and phase 2, and we'll have a JORC resource which is mind-bogglingly large. So that's all good news. And of course, then the rest of the money is going on development of this small plant for all the reasons I've just said. Not so important in the grand scheme of things in future, but very important as a stepping stone to getting moving with the big project. And the next big phase of that is the electric arc furnace, which will really round up first of all, it gives us a big increase in capacity, but it will increase the number of byproducts we can make. We'll get more money out of each ton treated, and really rounds things off as per the original plan for the small plant.
And there's theoretically 2 more payments to come from Vision Blue. One at 25p, one at 78p, which obviously is the one which people are going to get excited about and focus on. Obviously, it's milestones you've got to hit to trigger those payments. It's not timing. What is the sort of timing do you think that you'll start to see them come in?
Well, it's feasibility study driven. I think we're aiming to get phase 1 at least. It may come in parts, the feasibility study, but we should be around the middle of next year. We should be ready to publish the feasibility study, enough to get moving with the banks on financing phase 1, and then so that additional 10 and then $20 million is timed to provide capital for the construction. So I think it's 6 months within 6 months of the feasibility study, or 1 year, I've forgotten actually.
As you said earlier, there's an element of flexibility anyway, and you're getting obviously on really well with the Vision Blue team. So in a way, it doesn't matter, but it's just to get a bit of a feel of when the next sort of flows of money will come in. But I think you've indicated it's next year, which is fine. That's what I would expect.
Yes, I mean, it works very well for us because, of course, it means that the equity side of the development of phase one is covered by our own earnings from the small plant that we've talked about, and these Vision Blue stage investments, optional investments, but we expect them to happen. So financing is sort of already well on the way, and that the equity portion is, we understand very well where that's going to come from. We just now have to deal with the banks, and of course we're some way along that route as well. We already have the Development Bank of Kazakhstan lined up, and
that's a Mick calling you, telling you to get on and hurry up and get the bank sorted out. I mean, the banks, yeah, presumably since Vision Blue came on board, I guess the banks, and in terms of putting in a debt structure, have been a lot easier to deal with, and you know, I don't think anybody foresees any issues with being able to fund this into the whole project into production.
No, absolutely. I mean, it's a project that one, we have to obviously go through the bankable feasibility study process, but from the work we've already done, from our competence persons report, from the test results of the pilot plant, we know that the operating margins are huge. We anticipate about 80%. And so it's a no-brainer that it will meet bank requirements, provided everything goes as we plan.
And let's just pick up on one point you made, because this is a huge resource. I mean, and it is the lowest cost producer almost certainly in the world, which is obviously going to have an impact on the whole vanadium market. You know, you mentioned in your results the vanadium price is currently $8 a pound. It has come up slightly, but it hasn't gone shooting up like a lot of the other commodities. I mean, does this project, by being so huge, actually potentially reduce the price of vanadium because there will be so much supply? I mean, how do you see the vanadium price going forward over the next, you know, short term and longer term because of your project?
Well, of course, there's two very big drivers of growth in the vanadium market. One is traditional steel, which sounds boring, but really mustn't be underrated, because when you add roughly a kilogram or two of vanadium to a ton of steel, you greatly increase the strength. Now that means that you use less steel. It means that the world uses less fossil fuels, and it's economically you know, a no-brainer really for construction and many other uses. So that has been going for many years, a big driver of growth in vanadium. And then of course the new one, which you are an expert on, is vanadium flow batteries, and that's potentially, well, the estimates vary, but could even double the amount of vanadium required. So two very big drivers. We don't need both, we only need one of them, but in fact the vanadium market is very small, so as we've seen in the past, a little bit of extra demand can make the price shoot through the roof. Why hasn't it gone up with the other metals? I think it's because vanadium isn't traded. There's no speculative trading. It's too small a market. It's not traded on the LME, and so it's not. It hasn't got. It's just a supply and demand balance, and most of the market is direct from suppliers to customers. But $8 to $8.5 to $9, where we are at the moment, is a very satisfactory price for us. We would prefer it to stay stable like that, so that vanadium flow batteries are not having to suffer from having the price put the technology out uneconomic, only for it to come back again. You know, that yo-yoing up and down is very bad for developing technologies that use vanadium. So we would like it to stay where it is. That's a very good price. It's around the historical average, depending on where you take it. And we make a lot of money out of it because we have such a low cost of production. I think that suits the world. We won't overproduce. We could certainly go to a phase 3 and a phase 4 if the market's there, and we almost certainly will do if vanadium flow batteries get going and the steel market carries on expanding. But we'll obviously only do that as we see the demand is there.
Well, look, Nick, I mean, I think it's all going very much to plan. I mean, it's amazing really that we all know that mining projects do take a long time from start to finish. A lot of investors sometimes forget, but actually, you know, you've kept going with this, and it's now really getting a life of its own and moving forward, which is fantastic to see. So well done you. I think it's shown steady determination to get this project completed. And look, there's plenty of upside to come. So I look forward again to talking to you in the future as more news comes through, and hopefully the share price, which has found a nice new level now, should slowly tick up towards that sort of 78p mark, certainly, which is the final tranche coming in from Samick. So Nick, thank you very much. Unless you've got anything else you want to finally say to anybody, we can call it a day there.
I think we've covered it. No, thank you, Andrew.
Very good. Thanks, Nick.